Greetings and welcome to the Issuer Direct Corporation webcast series. It is now my pleasure to introduce your host, Brian Balberini, CEO. Thank you. You may begin.
Thank you. Good morning, everyone. Welcome to Day 2 Planet MicroCap Showcase 2020. Take about 12 to 15 minutes today to discuss Issuer Direct, what we do, why we do what we do, and how we make money, and then hopefully have some time for some questions through the process, which I think would be helpful for today. For those of you that don't know, our mission is to be the high-quality, cost-effective provider of the communications and compliance workflow technologies to our customers around the world. We'll discuss today what each of those components are, what our subscription looks like, and how we believe that it separates us from the rest of the pack in the marketplace today. But regardless of the message, I think what's very important for folks to understand is that our intelligence subscription platform guides our thousands of customers that we have today through the process of communicating with millions of people. And that is like events today. It is a earnings webcast call. It is a physical event at some point in life when we get back to that. It's a press release. It's IR communications and PR storytelling processes that allow our customers to find audiences all over the globe, which is separating our platform from a lot of the other competitors in the pack. You'll see forward-looking statements coming in a minute, and I'll skip through those and allow you an opportunity to read those at your own leisure. But more details, who we are, right? Founded the business in 2006. There's 80-plus employees today that work at Issuer Direct between U.S., Canada, and the U.K. And inside ownership's about 25% for a company that has about 3.7 million shares issued and outstanding. That's very important. It's something that you definitely want to make note of today. Unique position, cash, balance sheet is very strong, no debt. Been very well capitalized for a good period of time, generate a lot of cash relative to the size of our operations, and continue to do so, which affords us the ability to continue to invest in our platforms, in our people, and in the tentacles of the things that we can do in the market by way of possible M&A and adjacency builds for ourselves. Customer counts ended last year, right? We'll get to in about a week or so, get to Q1 numbers, but a little over 1,500 public companies did business with us at the end of last year, and a little over 1,000 private customers. What is really interesting, if we looked at a chart of private customers over a period of 3 years, is you would see that number go from a couple of hundred to the 1,000 number. And what's important, I think, to take away is where we drive that private company growth is our Newswire product. The majority of those customers are looking to obviously tell their story, build their businesses, think about public markets, and how to raise capital and where to go to do that. And having a proper storytelling process and a news partner and a subscription is significantly important. So you see the customer growth, 34% year over year, obviously very good from an end of year number, something that we anticipate still will be in the double digits in growth. And the right of the slide, you'll see, regardless of size of company, most people know us as the small cap, the micro cap, the nano cap provider. That's where our strength is. There's no doubt that say 1,000 of the 1,500 public companies sit in that space. But we do have customers of all sizes, including Dell Technologies and Kellogg's and others that are multi-billion-dollar market cap customers that have worked with us for quite some time, licensing portions of our platform or the entire platform, which is our key. But if we go back in history, right, we started the business, as we said, in 2006. We built a regulatory product, and we took that regulatory product and moved it into a platform subscription component over the last couple of years. And as the slide now will show you on slide 6, you'll see the progression of our platform, the progression of our business, and part of our execution of strategy is what we've done over a period of time by adding these adjacencies. The majority of these adjacencies we've either built or acquired. We're very proud of the platform and technology segments that we've got in our stock transfer, our website business, our AccessWire News business, of course, and then more recently, this virtual world, these virtual events, our virtual annual meeting products, and some of the things that we've done in the last 45 days to be able to address the needs of our customers in the market. So we'll continue to see these top-line numbers grow, both on an organic and an inorganic way, as we look to market to be able to continue to commercialize what Issuer Direct is and what our platforms are. And maybe that's a good segue into what is our platform. What do people buy of the almost $16.5 million last year and growing? how is it made up? And we look at modules, communication modules, as you'll see on the screen now on slide 7. It consists of our newswire, webcast earnings events, IR platforms, shareholder targeting, and hotline products, alerts. Customers in the small micro nano cap space generally license that, depending on complexity, between $6,000 and $12,000 a year. The compliance modules the same way. These are the typical regulatory filings. These are the filings that we all can ingest and read, 10Qs, 10Ks, 8Ks, extended into Canada with SEDAR, regardless of what regulatory body. If it's earnings that need to go to RNS in London, it can be part of this compliance module. So as we build our footprint out globally, we do it first by communications because that's the biggest interest level that we've got. And then we follow behind with the opportunity, like we did with SEDAR in Canada and RNS in London, to find other regulatory agencies that our platform can also encompass for our global client base in the future. It's important for us to look at add-on adjacencies. Sometimes these are subscription adjacencies like stock transfer and or proxy, but then there's also a component of services that annual meetings are driven from, the print and fulfillment sides. Most of our customers are moving to an electronic way, and we've had a trend of that, as you'll note later in the slides. We'll talk about service revenue coming down. But in orange and bold at the bottom, you'll see 2 new components, right? This virtual AGM and virtual conference and NDR product that we've been able to build in the last 45 days and bring to market for our customers allows events like this to happen. It puts us in a position to still be thoughtful to our partners, like this conference, and also others, but also find a way to connect. And tomorrow we'll all get to experience this. For most of you, it'll be the first time that you'll be able to do audio, video, and screen share on a one-on-one right from the comforts of your offices or homes or wherever you are. So we're really excited and confident about this technology and the other things that we've been building. Puts us in a position to continue to be relevant and help our issuers and help our conference partners at the same time. As we talked about customers, and we'll transition to slide 8, we talked about 1,500 public and 1,000 private. This just also reinforces the types of things that they buy. And if we wanted to focus in on any one of them, the more interesting part of this then becomes what we just talked about, is this virtual annual meeting product, which is very much like a webcast and a proxy platform put together. And where that fits, about 20% of the virtual annual meeting products that we've sold in the last 45 days have actually been to private companies, which is very interesting for us because we've always talked about and messaged that we want to find ways to add additional adjacency products to our private company platform, because just selling Newswire isn't enough. Just selling a newsroom isn't enough. And we didn't have the depth of products like we do on the public company side. So it's been encouraging for us to see some of those indications, and we expect to continue to see some of that over the next several quarters. Corporate vision, really about AccessWire, because everybody wants to talk about that. And for the hundreds of people that are on today's call are probably concerned about that business, wondering what's happening in the Newswire business as it relates to COVID. And I almost made it through half the presentation without saying that. But I think it's important to point out that a storytelling process, good or bad times, needs to continue. And we've been advocating to our clients that putting your head in the sand isn't the answer, right? And regardless with what your business is faced with, you still need to be out in front to your investors, to the investment community, and also to your prospects, your customers, and your targets, and to continue that storytelling process because it's vital for your business. And we're happy to report that our customers have not experienced a slowdown in any of the storytelling process, and we've been able to see consistent volumes in that business since mid Q1 when all this started to unfold for us, and as of most recently here in the last couple of days. So distribution still continues to be top of mind, but right now, candidly, our main focus on our Newswire business is serving our customers, helping them to ensure that they get done what they need done in their Newswire distribution space, and we'll readdress distribution again at a later point. But we're still working with them. We still got good opportunities for the back half of this year to gain the additional distribution that we need. But today, it's less about the distribution and more about price. And that's becoming a very prevalent theme, I'm sure, for a lot of companies, is that although they're trying to defend the base and the revenue and their customers, they're also fiscally minded and now turning their attention, to the bottom half of the P&L. And they're looking at where they can save money. And when they look at vendors in the communications and compliance space, they're going to have to start to look to somebody to save 10 to 15 to 20 to 30% and aggregate some of these services. So we're really uniquely positioned for that. Folks in the small microcap space know us for that, and that is really important for us. So 5-year historical revenue trend, I think it's important that folks that don't know the story We do some follow-up. We talk about the next couple slides because I'm going to have to run through them pretty quickly. But we see this platform and technology business being this double-digit growth business for us. Conversely, single-digit declines on service business as we tail away from print, proxy, physical certificates being printed for stock transfer, and deliver most of that solutions now in a platform technology way. So I would continue to be able to see these curves kind of doing the exact same thing. Service business may trough down and around the 5 million number, and then that platform and technology revenue is going to continue to grow as we move through the next couple of years. We don't see any indications at this point that we should see a change in that. As we do, we definitely will message to our customers. As we move to the next slide, slide 10 really talks about trailing 12-month EBITDA. I think it's an important slide. In the last presentation we did, it was removed unintentionally. As we look at this now, we've talked a lot about in the last 5 or 6 quarters of our investment in sales and marketing, our investment in our development, our technology platforms, and bringing new solutions to market, adding more distribution, knowing that we were taking an impact to our EBITDA number to be able to build scales of economy and build systems to be able to help fuel the next level of growth. And we had messaged at the end of last year that we felt like these EBITDA numbers would climb back into the high teens and get back into the low 20s by the end of this year. So we're still working towards that, right? The impacts of what COVID-19 will be for us and our industry are not really yet known, right? We don't anticipate seeing any major shifts and changes. And as we go through the next couple of few months, we're going to be able to have a bigger indication. Our goal is still to get there by Q4. We don't see anything standing in our way at this point, but it's something that we're going to continue to monitor on a weekly basis. If we wanted to think about Q4 revenue, right, and the next slide will change here for you. Revenue was up 9% to $4 million compared to $3.6 Q4 of last year. Your year-end numbers look very similar to this. The theme of this and platform and technology revenue up 19%. We've been able to keep our platform technology business, I believe, at 15 to 16%, upwards of almost 30% year-over-year growth now for several quarters. We're starting to build a backlog of this business. We're starting to build hundreds of subscriptions now into this platform, and our goal is to really focus in on the 1 to 2 subscriber clients, moving them to a full platform so we could see some of these ARPU numbers begin to grow. Obviously, we talked about service revenues being down a little bit, and that's a trend that we should expect to continue. I'll move on here as we come up against a couple of minutes. I think it's really important in closing that our shareholder base, our prospective shareholder base, and the interested markets that want to know more about Issuer Direct is we are absolutely 100% focused on our sales and marketing strategies and our e-commerce deliverable products and our storytelling unit of AccessWire. For us, about ARPU expansion, we need to be able to land and expand at a higher rate than we've ever done before. And I think, if the markets behave in a long U-shaped fashion, we're going to be able to find an opportunity for customers looking to save money to wanting to buy and consume more of our platform, which will naturally be ARPU expansion for us and savings to them from an ROI perspective. So we're really happy about that. We've got a bunch of new products that we had planned to roll out here. This conference business that you'll see tomorrow is one of them. The virtual annual meetings is another. And we've got a few other things planned for this year that we'll begin to talk more about. And then number 2, and this will probably tail us into some questions. This is an area of which we experienced a little slowdown last year, right? We did a transaction a year ago, January, this visual webcaster product that we're using today. And, we believe that there was going to be a couple of other transactions for us. Valuations didn't put us in that light. But however, now we're beginning to see some of these transactions come back. So we're not afraid to deploy the capital that we raised. We've earmarked it separately. From a cash flow from operations perspective, we've been very careful. We've committed to everybody that we're willing to spend and use the money wisely when we find the right transactions. And as we look out on the horizon, we believe that some of those are starting to heat up for us again today. So we're excited about that and what lays ahead for us over the next couple of quarters. I'll leave the screen captures that you'll see in the next slide and move on. I think what I'll do is I'll end with one statement. We'll get into some Q&A just for a couple of minutes here. I think it's really important that folks know what our vision is, right, is to be the trusted platform that brings the issuer and the investor together. Today, our name is on this platform that investors and companies are using. It's at the bottom of every investor relations product that we deliver, including vote counts and news distribution and regulatory filings. And that's important for us because we want the community to find trust in who Issuer Direct is and what we can do today. I've got a couple questions and some time to answer some of those. I will leave out who the questions are from, and I'll follow up with each of you, obviously separately. Thank you for asking. First question is, who are the biggest competitors, right? And where do we see this? Competitors come in all shapes and sizes for us, right? Broadridge is a big stock transfer agent, annual meeting provider. That would be one. On the regulatory side, it could be Workiva, right? It's a great single siloed product platform for SEC compliance. On the communication side of the business, it's really about GlobeNewsWire, BusinessWire, and the newswires itself. There's 4 major newswires in the market. Obviously, we find ourselves going up against them more often than not as they look to add additional adjacencies to that. So that's a great question. Thank you very much for that. Another question here is, could you describe a bit more about backlog being built in platform at this point, and how is the lack of live conference businesses being offset by virtual? That is an evolving response and question. So for folks that don't know about our conference business, when we released it about a year ago, it was our hope to bring to market a product platform that we could prove in single-digit form or a dozen or two how many conferences we could do, how we perform, and how our technology is adapted to the community. Obviously, when we entered the year, we had 35, 40 of these events committed, physical sense, and then a significant amount more in our pipeline. Obviously, all those have gone away, and I will tell you this from our perspective, we do not believe there'll be a physical investor conference this year. If there is one, it would be astonishing to me, and I don't think at this point any bank or non-bank conference folks are really considering putting their customers, meaning us, the issuers, and the investment community, their relationship at any sort of potential risk. So we have moved that business entirely to virtual. In some ways, the economic is better for us, meaning we will generate more income from a virtual event, and some of them will generate less depending on the size. And what that really means, and the reasons why I can't give you a full insight to this, is if an event was scheduled to have 250 to 300 physical companies present, the virtual event may end up being 100. And we're still working through that with our partners, trying to figure out and anticipate what their virtual event will look like in the next 90 days or 120 days. So that's an evolving change. The good news for us is we're not losing these customers. If they've gone from physical to virtual, we're still attaining revenue from them and keeping them. And some of them have just delayed, in which case we're just moving the contracts out into the quarters ahead. Another question we have is, years ago your transfer agent functions was a real mom-and-pop undertaking. It's a business still somewhat fragmented. Is rolling up the smaller businesses part of your growth plans? That's a tough question because I love the stock transfer business. It is a business that you can build upon from a customer perspective, meaning typically those customers spend more, stay longer, and do more with you. And that's an exciting part of why we have that business here today. Our belief is, however, that given the shift to digital and not physical form, and given the shift of DTC and the changing in the proxy rules about to happen, it's a part of our business that we're not investing more in today, meaning we're not looking to acquire additional. It doesn't mean in the future that we won't, but just today our viewpoint has a different view than maybe what the market is looking for, so we're going to be very careful about that here in the next year or so. Last question we have, and I think this will take us we'll have to follow up with folks on the other ones, but how is operational cash flows limited relative to the cash earmarked for acquisition? And how much have you made plans to cut marketing sales costs during the crisis to protect cash flow burn? That's probably a prevalent question for every presenting company right now, and every bit of management should be looking at this for their businesses. And I think we're maybe a little more unique than many, is that we've had very good success generating cash, right, in years past and quarters past. And we believe that we're going to continue to be able to do that. And so, for example, let's take the buyback, right? We announced the buyback and we said to the markets that we will do this buyback based on our historical cash flows and earmark the right amount of money from our assets to be able to do that, knowing that we could fund the business off the remaining part of our cash flows and excess cash, all while leaving the money that we raised alone for potential acquisitions. So we're not finding any issues there. That combination works for us. Yeah, we may change the combinations, right? And that's expected. Every company should be wanting to do that and do the right thing. So I think that's a great question, and I'm sure there'll be plenty of follow-up on that. I think I am out of time today. I really sincerely appreciate everybody's time and working through this conference. This is day 2. Day 3 is shaping up to be a tremendous amount more. I would typically read the last slide, but I'm going to be respectful of the time so everybody could jump to the next one. Operator, I'll now turn it back to you. Thank you so much.
Thank you. This does conclude today's teleconference. You may disconnect your lines at this time and have a great day.